Bank of Canada, they cut their interest rate again.
This morning, the Bank of Canada has announced it's cutting its key lending rate. As expected, the rate now sitting at 2.25%.
Bank of Canada, it has cut its key interest rate by 25 basis points, bringing it down to 2.25%.
And now everyone is asking the same question. Should you lock in for 5 years or go variable? If your mortgage is up for renewal, this choice could cost you or save you thousands. So if you lock in, you might miss the next drop. And if you go variable, just one hike could hit you hard. So what's the smart move right now? Let's break it down. First, let's start simple. Bank of Canada lowered the interest rate by a tiny amount, that is 25 basis points. That means the loan just got cheaper. So the main rate now is 2.25%. A year ago, it was 5%. That's a huge drop. Sounds like a good news, right? No, it's not good for everyone. For borrowers, they are really happy because the interest rate on their mortgages and line of credits just went down. But on the other hand, savers, they are frustrated because their savings interest rate on their GICs also went down. So question comes that why did the bank cut their interest rate now, and will they keep cutting or they will just stop here? Here is the big picture. Bank says the interest rates are at the right level to keep the inflation near to the 2% while the economy absorbs US tariffs. The bank cuts their interest rate now because the economy is slowing. Last quarter, GDP fell because the exports dropped. Housing costs, they are still high, but the rents are easing. And inflation right now is about 2.4%. And there are some signs that shows that prices are easing. So, bank has more room to cut even without prices shooting up. And here is what you need to know. The next Bank of Canada interest rate announcement is on December 10th. So, if things get worse, you can see more cuts coming. But if the interest rates go below 2%, that's a clear sign that banks are worried about recession. So what does that mean for you? Should you lock in for 5 years or just take variable? Let's make it simple. If you want peace of mind, you hate surprises and want predictable payments, just go with 5 years fixed. And if you think that price are going to cut more, you can go with variable and you would save more money. Right now, the variable rates are in mid 3s and fixed rates are a bit higher because they follow bond yields. Housing is just recovering from the bottom. We are not in boom yet. Resales in BC and Ontario are just recovering. And the housing starts in other provinces are already high. Also, the jobs in export sectors are weak. If there are more job losses in these sectors, then bank might cut the interest rates. That is why people are leaning more towards the variable because they feel that there is more cut coming. So, just knowing about the pros and cons of fixed and variable isn't enough. To decide what's right for your budget, here is the simple checklist. Before we jump to the checklist, if you are enjoying this video and found it helpful, please hit the like and subscribe button for more such insightful videos for the future. So if you are buying the house right now and don't want any surprises, just go with 5 years fixed so that you have peace of mind and have predictable payments. If you think that rates can go down and your budget can handle some ups and downs, take the variable rate. You might save more money. And if you are not sure, go with the hybrid approach. Take 2 or 3 years fixed to stay flexible if the rates are drifting lower. Market expects the rate to stay low for a while. Bond yields are falling as well. So the lenders, they might reprice fixed or variable interest rates. So before finalizing, shop around. Also, the bank says that they are about at the right levels, but if things get worse, they are ready to cut. So, what did you decide? Will you go with fixed, variable, or hybrid? Before jumping into that, think about your budget first and not just headlines. We just broke down what Bank of Canada interest rate cuts means for your mortgages and how you can make the smartest choice. But here is what most home buyers don't realize. The real cost isn't interest rates, but the hidden fees that quietly adds 100k to your home prices. Click here on my next video, New Home Policy in Canada could cut cost by 100k, to see how governments are finally addressing these fees and how you can take advantage before the rest of the market catches on. And don't forget to like, subscribe, share, and hit the bell icon for more such money saving tips. Until then, see you in the next video. Bye.